Hey, hello everybody, and we're back. It's the Mohawk Forex team. Yes, we're back doing another couple of live streams and to catch up with everybody. We've had a busy last couple of months and some real good successes trading small accounts and everything using our true scalping method. And if you want to know more about how to gain access to our Discord group and everything, as usual, go to the website www.mohawkforex.com. All the information is in the channel description below. So today we're looking at our usual every week weekly trade on the jobless claims in America, which is coming up in about 10 minutes time. You can see on here highlighted, we're using my FX book. And yeah, the jobless claims are looking for a continuing increase and increasing claims all round, as the general gist is the economy is slowing slightly but still not quick enough for the Fed, hence why they're on about there might be a interest rate rise freeze just on this month before they do another interest rate hike in July, but we shall see, because all these jobs, PMI, CPI, PPI, all these datas all are watched closely by the Fed. So we'll see how this goes. And like at the moment, good news is bad news is good news. So just remember that on the market. It's not a case of entering these colours and just wishing away and watching your account get blown up. You've got to know what the news events entail. So if these figures are greater, then that can be bad news, but it can be good news for the confirmation that the Fed is not going to heighten rates this month if they see that there's more people claiming jobless claim allowance, simple as. So we'll watch that in the next few minutes, then we'll get ready for the market open. So we're trading on our 2 and 5 minute combined charts. Obviously we can have a quick look at the daily as well and see what's happening on the daily chart with the 500 as well. Let's have a quick peek on the daily, and you can see there we are basically a bearish RSI, still in positive territory, so we're on a bit of a pullback here. We hit a heavy kind of monthly resistance, and we've been coming down ever since, but we're about to hit some support here as well. And again, you can mark these. The good thing is you can mark these up as areas to look out for. There you go. So that's kind of the big daily support, and we can just go back to the 2 minute time frame, which I like to trade on, use for executions. I've marked out where the jobless claims news is. Here's that daily support. So if we do get a break to the downside, here's where we can be looking to buy. We've got a nice little buy zone here as well, and we've got our grid system here, which are heavy resistance, heavy support zone. As you can see, heavy support's already linked up, telling me that this is either a H4 or a daily support zone that price is just about sat on. Neutral is the daily pivot, so above that we're looking for buys, below it we're primarily looking for sells. And then we've got a minor resistance, and then again the repeat, the H4 or the daily kind of resistance. So all this you get free as part of the package when you join our Discord group. So these are automatically drawn on your charts. You haven't got to worry about drawing trend lines, support and resistance and all that. It's already done for you if you want to select it. You can literally just go onto our system and select which indicator you like the look of, and you know, we've got lower lows, higher highs, we've got the zigzag, we've got supply and demand, we've got points of interest like Fibonacci, support and resistance zones, reversals, and a VWAP if you want as well on there, which I can put on there now to show you. Have the VWAP line on the 5 minute. There we go. And also we've got our RSI scanner, which again is unique to us. So we use this for confirmation of movement and trends. We're looking for movement when the RSI is above or below the average line, then that's where we're looking for a signal to take a position, as long as the price action is set our way. So with this jobless claims, like I say, we've got a 20 and a 200 moving average on the 2 minute time frame, again just to give me some idea of the overall bigger trend. As you can see, there's the 200 and there's the 20. We've set our daily level of support here. We've got some minor ones here which is the price is ranging around on, so that's all pretty well set. And in conjunction with this, we've been trading the London breakout. Again, we had another win today on the cable pound dollar on our London breakout trade as well, which we set up. So that was a nice 15 pips winner. And also I took 10 pips win on the UK 100 on this setup here, which you can see is still in play. If you wanted to be, if you were holding it for all day, I keep telling my students, just, you know, go for that magic 10 pips. That's all you need. There was a 10 pip winner there. I took my profit and watched it pull back. As you can see, once the RSI crosses that average line, I know we're going the opposite way for a while. So we just crossed back down again. So this could pull back down. I wanted to keep this on the chart just to show that you can use it all day. The zone that we set for our breakout is kind of what we use as our 1-to-1. So we're trading, we're risking 21 pips to kind of make 20 pips. Like I said, I took 10 earlier, but we'll keep this running in the background. This is UK 100, the FTSE 100, and then this is cable. And on cable, we've actually going to set up a trade for the breakout of cable as well. Here we go. We've got our zone set for the first hour of trading. We'll let the price sink into this level, and if it doesn't excurge too much, either above or below, then we'll look to take a breakout from this kind of zone here. But obviously if price has already moved 20-30 pips within this zone, then there's no trade. We want to be looking for it to be in a range before the breakout. If it's already broken out, then it's a valid trade. But so far it's worked really well this week. Like I say, we've had 4 out of 4 wins on cable and 3 out of 4 on the UK 100. We just didn't take one trade. It didn't the setup didn't happen like here, where the nice breakout, we took the trade, we grabbed 10 pips and we got out. And what you can do is, if price breaks below our line again, then we can re-enter again. I'm not going to take a sell yet until we dip down into this zone again and RSI is red to confirm it. So we might take another trade on UK 100. We'll just see how it goes. We've got Bloomberg on in the background as well.
Young adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad.
So we're just waiting. So we've got a countdown now. This news event. We're just going to log in. I'm on IC Markets, as all of you know. So 1 to 500 leverage.
savings or delay paying off debt, or 43% drain their retirement fund. So why not draw the line? There seems to be a generation
Let's make sure we're logged in.
parents who can't understand why being
We're going to be using a $1 pip, $1 lot, which is 80 pence, $1 for these trades. So nothing massive. And we've got 10 seconds. Let's wait and see what the news results going to be. Like I say, here we go, it's the countdown. So good luck everybody. Let's see what we can, if there's a movement on this. We've got a bit of a spread on 500 as you always do, but you can see it's a move to the upside. Let's see if that's going to push up. Ranging around. There's a nice spike up. Let's have a look at the result. And it wasn't as good as expected. Look at that. So continuing actually dropped, but the actual new claims weekly average is up, and so's the initial one as well. So this is why the market had a spike up. Let's see if we get a push upwards now on this. So better news for the markets. Ooh. Right, we'll close those trades. There we go. And what did we get? We managed to get 10, 15, 5, 10. Oh, we got about 40 bucks on that trade there. That was really nice and easy. I had 5 positions on the buy. Again, just using small lot sizes. Nice win on the buy. Just post some results into the group so they can see. Let's have a quick look at the chart and see how that played out. There you go. There it was. So, like I said to you, it was better news for the markets in terms of more people claiming jobless claims. Means there's less likely of a chance of an interest rate rise. So what we'll do now, we're going to wait for the pullback on this. Let's just have a look. Let's wait for the dip down. We've got a reversal signal. Just going to enter some trades in the reversal now. Let's 5 away. Let's just dip in and out on this one as well. Make sure you've got plenty of margin leverage so you can average it down if you need to. Just go for a small position at first. Let's see if we can get another $20 or so maybe on this one. Oh, actually we've got, there we go, brilliant, brilliant. There you go. So that was another nice, we took the sell there on the reversal, and that's it. Just 2 banks. Nice wins on the pullback. I always say to everybody, if you miss that initial move or you're scared to take the move because you can think it's a fake out, just wait for the reversal. As you can see, our indicator popped on there, showed us the reversal. I jumped in on the sell there, and we managed to get a decent $40, another $40. So we went to about $100 there in what, 3 minutes. So that will do as a nice start. I don't like to risk any more than 2 blocks of trades. Let's have a look what the jobless claims is saying. There we go on Bloomberg.
I don't know if necessarily there is one, because the jobless claims are riddled with problems, which we discovered during the overall pandemic, but significantly higher, somewhere closer to 300,000. I suppose you would start saying it is moving in that direction. The question is this a one-off, as we saw the last time we went up big, or is this the start of a trend?
Lift to the equity markets here, fractionally, I should say, out of red. The yield space moves in. Oh, it's a churn, I'm going to say again on yields. Dollar weaker fractionally. What else, Lisa? What do you say?
I will just say that, you know, Mike,
Dollar will be weaker, but look at that. You see, that was a nice little push up on the news. We know how the manipulation works, but like I say, the more people that are claiming the jobless claims, then the market, especially the stocks, are more interested in the fact that they're less likely of interest rate rises and a freeze this month. So
intraday highs, you're seeing euro gain considerably versus the dollar. So this is basically saying it takes some pressure off the Fed, and that is the big message.
So that was a nice little cheeky win. I like that. That's how you do the true scalping. I say, well, there's no stop loss involved, because obviously if it goes the opposite way to what I think, I'll just end the trade. Yeah, as soon as you start placing stop loss and orders and stuff and everything, as I keep saying to everyone, you're showing your hand to the market, and this is where you get spiked out, you get triggered. You know, the stop loss hunting occurs. So many people now wising up to that, and I would just advise, as soon as you become an experienced trader, is not using a stop loss. You know, I'm not saying you just leave a trade forever. I'm saying you monitor your trades, but you don't set one, unless, I mean, even if I trade overnight, which I rarely do, I would not set a stop loss. I'd only set a take profit. As soon as I stopped using a stop loss, my majority of the time is when I started becoming profitable, and that's the truth. It's a stop loss that kills your account. But that's a discussion for another day. Highly controversial, I know, but when you're in and out like we are, you haven't got time to set a level, and if you have, it'll be so tight you'll get stopped out. So you know,
I'd be cautious about this morning's data just because there's a lot.
There we go. So claims were 261 last week, estimate 235. So more people claiming.
Really rising, and that's I think an important indicator. And then as you look forward for the consumer, you have excess savings dissipating by the end of the year. You have student debt payments coming back, and so we think it's a consumer that looks a lot weaker by the end of this year.
What gives you confidence, especially since people have been pushing out this date again and again and again?
Yeah, I don't think you want to express too much confidence.
So as I say, there we go. It was 261.
The labor market has proven to be more.
The average was up. The continuum was slightly down, but it's this figure. Like I say, red, most people would go, hey, we're selling. No, you're buying, because you've got to interpret what the news result means, not just a mathematical figure. This is a mathematical thing on FX book, and most of them it's telling you better than expected result mathematically, not, you know. So just, you know, you got to watch out for that. You can be caught out by that. You know,
people say maybe this is a sign that this Federal Reserve is willing to accept inflation that is a 2.0.
And tomorrow we've got in the night the Chinese inflation rate news, which will set the stall out for European Open tomorrow, and then that's it. There's a speech in the afternoon, but there's no real news tomorrow. After, you know, last week was a busy news week. There's not a lot this week. That's why I jumped on to do a live on this one. We traded the euro growth rate as well. Had a win on that, and obviously JPY affected a bit of the DAX this morning as well. So, you know, small little news events that you can just drip in and out of. Get yourself $50 to $100, you know, and then that's it. Fold it all up. Now let's have a look how our trade would have been doing. So on the breakout, like I said, I took my profit here, but if you were still in that Asian London breakout trade, which is, you know, still valid right up until New York. So we've got about an hour to go. And you can see there, look, now you would be actually 30 pips in profit if you'd held that since just after the London Open. So, but like I say, we're not greedy. We take there was 15 pips on offer there, we took 10, and that's what it's all about. RSI, as you can see, was the right way. Bang, done. And as for the UK 100, like I say now, you know, this one, for those of you who want to, you know, run it all day, you can do, and obviously you just, the way to do it is obviously end the trade just before the end of New York session. You don't want to be running these overnight, and if you're going to loss, you're going to loss. If you're not hit your stop loss, you send the trade wherever it is. But as I say to the group, what I try to do is, if this hasn't been triggered, I mean, this triggered pretty much, it triggered 45 minutes after the kind of zone we set, so that's good. But if it kind of gets to 11 AM UK time, as you can see here, and it hasn't triggered the trade, then usually I leave it alone for the next day. But then it's up to you whether you take your profit like I did, or whether you want to keep this running and see if we're going to have another dip down on it. At the moment, RSI is saying it's just ranging away, as you'd expect, because it's the FTSE 100, it'll start slowing down in the next couple of hours after the open. But it was a nice, and again you can use our Mohawk Forex system on any of these, add it to the chart and see why. You can look at that and go, okay, look, why have we got a rejection here? And you can look left and then you can see why. Look, there's the zone which I'll mark out. Look, you can see there's the resistance zone. So always look left. It always tells you the picture of where price might retrace and pull back, but you don't even need to do that because with our system, look, there it is. If I take the purple line off, which is the one I marked, you can see that it says heavy resistance. It's already drawn for you. Now remember, these are zones, never lines. It's always in that area. So you can say that that's a 4-hour H4 daily resistance, and that's why cables pulled back to that zone. We had a couple of reversals. Look, there's the price reversal that worked, price reversal that worked, price reversal that worked. Then when these labels come and stick, they're pretty accurate. So you can clutter the chart. I mean, yeah, I have it on there because, you know, I take it off. I like to trade more naked, but if you just don't understand, you go, why is it pulling back here? Oh, you know, I've not looked left, or I don't understand how that works. Then obviously our Mohawk system there will tell you, okay, there's 2 areas of resistance, one above and one here. Look, this is why now we're reversing. And then you watch the RSI dipping down from an overbought zone. So if you wanted, you could be jumping in for a sell on cable for about 5 pips. And that's how you work it, you know, and just keep doing it day after day until it all kind of sinks in. So we're getting a dip down. Once I start seeing the RSI creep to that 82, 83 level, I'm looking for the reversal. And obviously the UK 100 might well follow suit. So obviously the dollar, you know, was weakened. I was just seen by that news event as well. Now it just sounded kind of pulling back from the news. There's the news event and it's pulling back. So we could jump in there. And there's your pullback again on that jobless claims. Better than expected for the market. It pulled back, as you always get. You get a retest of this resistance zone and then a drop back, and then we'll see if it retests the 20 and the 200 moving average, or it's just going to range around in the zone now. RSI still saying we're still, you know, bullish, so this is why I leave the trades alone. I like to trade either when we get a cross on the RSI or we hit those overbought, oversold zones, and the rest of it I can't just leave alone because it indicates kind of it's going to be ranging as you'd expect with a bit of time to go before the open. So we can just move this up now and put a line ready for the open. Sit back and wait. So that's your MY open. And that's what we're looking at.
Some 230 square miles of Ukraine's southern Kherson region is underwater 2 days after the destruction of the Mohawk dam. Now, the regional government says almost a third of the floods.
Remember, you can set alerts to your phone or to your laptop or whatever you're using on all these indicators as well. So cross or hit of a neutral resistance or a heavy support. Go watch this on the 2 minutes. See, look, it's pulling back. We could have kept another sell there. We're just dipping back down. Probably going to retest that 20 moving average. We'll just watch. And if you look on the 5 minute, we're actually clear. We've got our lines here. We're actually clear down. And again, you can always mark this out. Look, that's what I tend to do. See if it's worth the risk. So 25. I'll break out, we're leaving that running, and like I say, we've got the setup. This is the setup for the New York breakout, if you want to call it that. Some people like to do an hour before, I like to do an hour after, and you get less trades, but when they happen, as what happened on the UK, they are more effective. It's a higher win rate. I always find that doing a breakout strategy based on previous before opens, there's always that fake out from the market, because the market's there to fake you out, grab those stop losses, take the market the wrong way, make you enter your trade in your pending order, then obviously go the way afterwards. We see that time and time again. So if you wait until the first hour of trading, the market's done that, done its liquidity grab, done its stop loss hunting, raised around a bit, collected the money, and then the first hour it goes, okay guys, this is where we're going now, we're taking it in a bullish or bearish momentum, and then you just try and jump onto the back end of that. Now if it moves before that, then you just accept I'm not going to enter the trade, and I might look for the pullback, but if it's still ranging, then usually you'll get the move for the day, and you're able to jump in on it. So that's why I like to do the breakout for the first hour, based on the first hour trading, and I don't jump in apart from the opens and the news events, and then I'm in and out, you know, as you know. But you know, both these two strategies work really well. Like I say, we're 4 out of 4 trades on the cable one, and we're 3 out of 4 on the UK 100 this week. And again, you can just practice this on a smaller trading on a demo account, but you're always better practicing with small real money than demo. I always say that. That way you get to appreciate the slippage, you know, and how things are different when you jump from demo to live. So you see the nice pullback here, look, where we're looking for 5 pips, remember, a possible 5 pips on cable from this position here, look, on that candle. So about here, look, so we're looking for just a little pullback, nice peak. I like to see this when we see these mounting peaks. Look, you always get a drop there, look, drop there, sell, you know, there, sell, even in the middle, look, comes up, sells. So you know, you can just keep watching this RSI, have it on a separate screen, and have alerts of course for it crossing any of these zones if you want. And as soon as you get across here to an overbought oversold zone, then you want to be looking to take the reversal. So like here, look, you could have taken the add alert. So you can create it, and then you can create the alert from inside our indicator down the bottom here, look. Alert type RSI crosses overbought oversold zone, look. So you can have alert, and then just click that, and then you can have the RSI center line, or breaking out the neutral. The center line is a good one as well, so you can have an alert for that as well, look, and then just click OK, and that's it. You are, when you just click on this, create, job done. So you'll get the alert every time the RSI crosses an overbought oversold zone, or if it crosses the average line. You can see it would have hit TP now, 5 pips, win on pound dollar. UK 100 is still ranging around, as you'd expect, 48. It's still in that kind of a neutral zone, as we call it. 500, as we said, look, it dropped down, didn't quite get, retesting this resistance zone. That is our alert already, you see, proving it's working. So we just jump back to pound dollar. And there it is. See the RSI crossed the neutral and dropped down. So that's a nice one there. Let's just see if that's going to drop. Let's watch it. Crossed into that 55, across that average line. It's good. As soon as you get that alert, that's what you want. Dropping down. Get the dollar just regaining something back. And again, any of these you just would try and go for 5 pips. If you wanted to set, you know, say we went short from here, obviously, you know, you're going to be risking 21 pips and you're going to be taking it down to that level there. So that's kind of what you might be looking at if you were jumping in on this now. RSI, as you can see, just crossed back above. That's why we got that alert again. So every time you get that, you know, so you get lots of alerts, so you just got to jump on and see which one is best for you to take, you know. If the setup is there, like this one, you can just leave this one to run. So we're going to be trading this one as well. You can see we've got our moving average, when the price is going to come back and test it or not. We'll wait till we get in that zone. US 500's banging its head against that resistance. Pushing down now, it's nice. So to see if that rejects is going to go.
Subservient to anybody, and certainly not to Saudi Arabia. Now just keep in mind they've stuck the United States and really the world with an increase in petroleum prices just in the last week. They decided to cut their production, the result of which is America...
RSI just dipped down again, you see, below 58, crossed.
At the same time, this merger is going to give Saudi Arabia access to the American market, access to American money, and not have to pay taxes. That just really pisses me off.
Well, I wonder though, and to your point, how much you have support.
Nice swears.
of the Congress at a time when they don't want necessarily OPEC Plus making another cut. They don't want a continuation of these cuts. They don't want oil prices to keep going up. How do they sort of gain leverage at a time where they might be equally angered as you, but might have these other interests as well?
Well, let's put it this way. If Saudi Arabia thinks it can come to America, run a business in America, and not pay taxes, something is seriously wrong with that equation. And that's exactly where the situation is today. And we as Americans ought to say, yeah, fine. If you like this merger, I do not, but if you like this merger, then go ahead. But by God, you're part of this system and you're going to pay taxes. And that's that. You're not a charity. by any stretch of the imagination, and this loophole, this gross tax loophole, simply has to end.
Congressman, 10 years ago or so, you decided that the nation had to honor a golfer named Jack Nicklaus. You put in legislation in the House.
Brilliant. I just got out of there on that one, so I took that little break. What did we get? 25 pounds, so $30 on that one there. Just traded on 0.5. Just 2 positions I took on that. So just to show you, so it was a nice easy sell on cable. Just following that system, just jumped in just before this. So yeah, again, that was only a couple of pips, but that's all you need. Like I say, I'm not greedy, you know. I'll watch this and see if it comes down more. I don't like holding trades when we get to that half an hour before the open, but another cheeky, you know, $30 there.
Do not pay taxes, but we'll let that go for a while. The other issue is one of competition, and what has been created here.
And that's what it's all about, taking the green when you see it. Don't mess around. Just because you set these levels does not mean you have to wait, do or die. You know. Now if the RSI dips into red, then we're going down lower. So, like I say, we've got $30 there for a quick little trade, a little bonus one. Watching UK 100 range along. So another nice successful trade on cable. We're setting up the breakout zone, as I said.
He could have gone and negotiated with 2 different leagues for the use of this golf course. Now he's going to take whatever they offer him. He has no choice. So there's a monopoly issue, and I would expect
US 500 ranging along nicely as well. And again, you can do the same breakout thing with the US 500. You can give it an hour. You know, after the first hour in Eastern Standard Time of trading, put a box around it and then wait for the next breakout and use the RSI to confirm the move. So many times if you people haven't got time to trade, that's a good way to do it. We just set this. Oh, there we go, we've got another alert. And that is, yeah, so I did well to get out. That's just the RSI popping back over the average line again, just telling me, you know, it could be a buy. So yeah, this is why we did well to get out of that trade. We would have been, there you go, look, back in a loss again, you see. So take the green, and you can always go back in again if you see that dip back down. If we get another alert, we go back in for the sell, but we know this will probably range on a little bit now with 30 minutes to go till the open. So you're better off now waiting for this setup to jump back in on cable. So we'll keep watching this.
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. From the world of politics,
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting there.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Lyons
door was open for regulators to do more. And that puts the Fed between a rock and a hard place.
as they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest.
What I usually can do as well in preparation for the open, you can set some levels based on, you know, the 5 minute or the 15 minute, whichever time frame you want to use. But I, you know, again, there's the daily pivot, so I can put a line across that, and this line here is the next nearest support level just above our VWAP. So that gives me a nice trading range that I know that if we break below here, we're going to bounce back and drop down lower, And if we go above here, we could bounce back before going higher. So I've got a tight zone based on our grid, our Fibonacci and support and resistance zones. So I know we're in a range, like you can see here. That's then I zoomed in just so I can see the price action, but it's a tight zone, as you can see, like that. So if you want to do a little bit of a breakout thing, you can do, but again, I don't rely 100% on it not, at least for the first hour, because like I say, of it being faked out, you'll get a little trigger below. If you set a pending order here, say guaranteed, the market would go that way, trigger it, trigger your pending order, your stop loss would be, you know, kind of around here. Guess what? It triggers back, smashes it, and then drops. We see it every single day, and you know, as a retail trader, you've got to wise up to it, and you will stop losing. Right, we've got another alert. Let's have a look. So why do we get an alert? Because again, we got a cross on the RSI. So it's creeping back up slowly.
From New York City this morning. Good morning, good morning. What a 24 hours whipsawed by surprise rate.
I'll leave it on here, even though I'm not in a trade on it, because like I say, I took my profit here early. But just to see if we do get a move back down, or this moves back through it on the open. Like I say, I'm more worried about trading, this zone later on. And then we're done. We're done for the day, you know. We traded for about 30 minutes this morning, and then we traded the Euro news about 10 AM, and then we were done.
Global bond market shaken by surprise rate hikes. Druckenmiller, Dalio warning the pain is coming as jobless claims surge to new highs for the year. We begin with the big issue. Blame Canada for the smog. For the bond market volatility too. A second surprise rate hike this week. First Australia, then Canada's central bank following with an increase of its own, stating that monetary policy was not sufficiently restrictive to bring supply and demand into balance. The latest move coming after Canada signalled a conditional pause back in January. Sound familiar? Jim Reader, Deutsche Bank says the big question now is whether the Fed might follow up with a hike of their own next Wednesday, or whether they'll finally keep rates on hold after 10 consecutive increases. The move this week running counter to the widely held view that central banks are just about done. City's economists, who correctly called for a rate hike yesterday, are predicting for more of the same next week. Andrew Hollenhorst saying the surprise nature of hike shows that once it becomes clear policy rates are not sufficiently restrictive, our base case remains for a 25 basis point rate hike next week from the Fed. The Fed's next meeting just 6 days away. Joining us now to discuss Morgan Stanley.
So there you go. So next Wednesday we could get a cheeky interest rate rise. So we'll be trading that, hopefully live as well. Gold is what I like to trade on interest rate rises. Love the moves on that. And again,
so the base case still is no change, and just to
what I tend to do on that is trade the reversal. The initial move is so fast on some of these news events, just like NFP, that you either think it's a fake out, or you just, you know, your broker's not quick enough. There's the spreads and everything, it's all stacked against you. So you just wait for the pullback, wait to reach a nice level of resistance. And again, it's easy when you've got our system here, because when it hits one of these heavy or neutral or heavy support zones on any news event, guess what? I'm going the opposite way. Even if it's just enough to get 5-10 pips. I'm not saying the whole thing's going to reverse down. It might just bounce before continuing up, but I know we're going to get a pullback. People will take profit, and guess what? We want some of that. So we'll just pull back for 5 to 10 pips, and then if it goes back and retests, we'll go again. If it breaks, we go higher, and then we go with the trend. Once you get the knack for it, it's just, you know, and time after time we keep doing the same pattern. Sometimes, yeah, of course, it's not always 100%, nothing ever is, but 8 times out of 10 it works. It's down, catch the move and the reversal, get out, wait for the bigger move. And that's kind of what we're doing here on the open. Look, we've got, you know, these areas set up, waiting. Price about to bounce off that 200 moving average. Look, just breaking below on the RSI. Cable, look, again, still ranging around on that. It's not doing anything major, no big moves. And same with UK 100.
let's talk about that statement from Governor Tiff Macklem, that line that monetary policy was not sufficiently restrictive. People are starting to imagine that maybe that line might be in the Fed's future. Is it more likely than not that if they pause, take a skip at the next meeting, they'll be hiking again later this summer?
It's certainly possible. I mean, we've heard that. We know Bullock's talked about that. We acknowledge that we've just got to a level that's restrictive, where other Fed officials are kind of in various camps. But it does remain to be seen how restrictive policy is right now. Yes, in an absolute term, Fed funds rate over 5%, the highest we've seen in a long time. We think it should be restrictive, but if we look at what's happening with the economy, especially with a lot of the hard data, plenty of surveys are telling us that things should slow down. But when we look at consumption trends, spending trends, and especially with the labor market, which
Cool. It's replying to some people.
maybe it's not restrictive enough. So I think that's going to be a key point. But we're still in the camp that there is a lag with all these rate hikes, and over time, all of those.
Looks like it's going to retest that same zone. So this is where you'd be tempted to put another sell in again, but you just watch the RSI. You wait until it gets back over that 75. 75 I like to see as a continuation. You see when it crosses here, look, it continues. I don't automatically, you can enter a small reversal trade, but I'd rather wait for it to get up closer to that 85 and then take the trade.
I don't think it's got any easier at all. We may have to have different people on the show because Colin and I are very much in alignment at this point. It remains to be seen. There are lags in policy. I think everything that happened with the banking sector.
Like I say, we've already taken our profit on this trade here. I'm just leaving this on here just to see if we do get a reversal, and I might jump back in again. We've got 25 minutes to go till the open. You can see we're set up on the 500 and just switch up on my broker to the 500. I think, like I say, we're only going to trade in $1 a pip, so plenty of margin, and it's 170. About $200 required margin, so you know, plenty. You can open plenty of positions if you need to.
I mean, I think the fact everyone has to accept is that everyone is going to be wrong, including the Fed. The question is how much and in which direction. In the context of whether or not inflation expectations, for example, will become unanchored, whether this inflationary process becomes embedded, I personally don't think so. At least there's no evidence of that yet. If you look at survey measures, if we look at break-evens, it does look as if in the longer run inflation expectations are still under control. I don't think they, by any stretch of the imagination, want to take that fact for granted. But, you know, again, as Colin said, we've got the funds rate up over 500 basis points from where we started. The balance sheet is still running off. It is hard to imagine that anyone would conclude that the Fed has just thrown in the towel on inflation at this point.
Hard to get a read on the economic data at the moment, Seth. Jobless claims were lower. There were distortions associated with the data coming out of certain states, and now they're higher again, and we're wondering whether there are distortions associated with certain states all over again. Seth, how would you read that surge in claims this morning?
I would read it as 1 week worth of data that goes in the direction of being softer, but by no means would I change my overall view on the economy based on that one data point. It's just too noisy.
Put it together with the jobs report on Friday, Colin. What kind of state is this labour market in?
You know, it still seems pretty tight right now. I'll joke and go to a point Seth made. You probably booked the wrong people here.
Let's just go back and check on pound dollar. It's creeping up still.
Is just one claim, but we would expect it to start trickling higher. That's been the kind of the mismatch we've seen that has admittedly been longer than we've expected. We've seen all these headlines that started with tech companies, also then kind of trickled into the financial sector of layoffs, and then we weren't.
Let's listen to Bloomberg while we drink our coffee and wait. This is it. We'll wait 20 minutes.
We start to see that trickle in as these lags come through and as time passes. At the end of the day, the labor market does appear to be relatively strong. We did get that jump in the unemployment rate at the previous jobs report release, but I think that's going to be important to watch as we look at the next month or even two. Luckily, we'll get one more before the next Fed meeting to see what that household survey did, what do non-farm payrolls look like, and does the unemployment rate continue to rise? Because if I think it does continue to rise, even if it's by 1/10 or so, that supports the case for the Fed to pause and really see what's going to happen over the next handful of quarters.
Seth, I've had a lot of questions, people running in about the labour market report from last Friday, the establishment survey which goes into payrolls, the household survey which goes into the unemployment rate. Seth, how were you explaining that to clients?
It's a little bit of a head scratcher. It went against our forecast, and so what I never want to do is sort of cherry pick only the parts that go in the direction of our forecast. I mean, it's just an empirical fact that the household survey tends to be more noisy than the payroll, than the establishment survey, and so I think you have to admit that there's some strength there. Nevertheless, what we know as a fact over the past year or so is that the amount of payrolls in the economy,
hitting some nice support here, so like I said, it's a bigger support zone, so you never know, we might get a little bounce up. Or if we break this zone, here's a buy zone, look, you see, supply and demand zones that again automatically are placed on the chart for you. You haven't got to draw anything. Anything I draw is just this, just to show people where I'm going to be looking to take a trade. Everything else is done for me, so it's just a case of just sitting back, waiting, let it all unfold. That's what I like about this system.
Are up by close to 80% from the lows of almost 12 months ago in the middle of June last year. Seth, that's maybe going against the grain a little bit in the equity market. Seth, can you explain that, the economics of that? What is going on with housing with rates of 5% and mortgage rates potentially through 7%?
Again, dollar's weaker, pound is creeping back up again. We're at 125 nearly, 120 to 124.9. Again, RSI, as I said, you just don't look to take a sell until RSI crosses that average line or dips out of this overbought zone. Good move on the UK 100. Look, if you were holding this trade now, you'd be back to break even. So it's up to you as a trader whether you decide to jump out the trade now, end that one, and then get ready to re-enter another, you know, or you're just going to hold it. It's coming towards that breakout zone. Again, we could just go to the left and see where potentially we could get to. We already dipped below that last area of support. And there we go, and you can see here, look, here's all our other trades we took this week. You can see you've got areas, yeah, right here. You can see why it reversed there, middle of that W, look, perfect. And then you're going down to here. So again, if you want, you don't have to clutter the chart, but you can put the lines on there just by looking left.
But first, let's start off with a winner. That is Adobe. Shares are popping, although maybe not quite as much as you would expect, given the fact that AI is a part of the headline. They're launching subscriptions for new generative AI features that will include copyright protection. The stock up 1.7%. Signet Jewelers down 10.4%.
So you've got all these zones that you can put a line under, going all the way down to here, and then to here.
GameStop plunging down 23%. Matt Furlong is out. Ryan Cohen is in as CEO.
You can zoom back. So some areas of support there, and again, if we put our system on there, the major ones are highlighted. So that's more likely to be where we're going to go down to. As we said, look, we've just got that area just about there, and then our main one, our kind of daily pivot, is here. This is where we're selling if we go below there. So you don't need all these. Like I say, you don't need to clutter the chart with too many lines of support and resistance. You just want to be focusing on the major ones.
Saying that this recession is the best predicted recession that hasn't happened yet and may not happen. That conversation still ahead.
Then we turn it off once we've seen where we're going to be. You can see that's why. It's a messy zone here where it is now. It's got a trend line it can break as well, and then we're going down lower. So once price breaks all this as it did here, then you can take profit, and look, here is the zone again, the support, last support zone. But we might go lower, you don't know, you just don't know. So don't end the trade too quickly. And then once you know the zones, you can just take that off the chart and just watch it, you know, see if it plays out. Let's see if there's going to be a an area. As you see, look, there's back to the heavy resistance. There's your last reversal. There's your zigzag. Take the zigzag off for now. Take the higher highs off as well. We don't need those.
Are you happy doing this? You're going to do this for the foreseeable future?
I like to see the trend line.
I love what I do.
I like the supply and demand, points of interest. Again, I just want it to be to the right hand side of my chart. Support and resistance, definitely. Take off the confirmed levels. Reversal, yep. And VWAP. So that's kind of my settings I use. I can just have a look and see. So you could say, right, your stop loss needs to be just above that 4-hour H4 resistance. That's more of a safer trade. And you can see here, look, this is where the buy zone is, where it could come down to. So that's pretty much a good setup. It's got a reversal here, but this is just to stop you being spiked out. And again, once you've done that, take that off the chart. And again, I'll just put that here so you know that's the London breakout zone. We did the Asian one, but we got no trade, and so we did the breakout, the 1 hour. This is it, look, between 8 and 9 AM, London GMT. And we took the first win there. Right, back to US 500 with 15 minutes to go to the open.
In no way does the fact that it has
There's no other news today, so this is going to be our final trades of the day. And then I will update the group on the breakout as and when it moves.
And in fact, inflation gets stickier the longer it stays in the system, that it increases, not decreases, the probability of a hard landing.
Famed investor Stanley Druckenmiller remaining pessimistic on the US economy. Ray Dalio delivering a warning of his own.
We're at the beginning of a very classic late big cycle debt crisis, when the supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers.
Seth Carpenter, Colin Martin back with us. Colin, you get to go first on this one. That warning from Ray Dalio there on the debt market, you're in fixed income. What do you think when you hear that?
Well, that was a pretty dire warning, but we think that the debt market is still in pretty good shape, and if we look at where yields are right now, we still think it's an opportunity. So I don't have the full context of his comments there, but when we're talking to clients, that's not the message we're relaying. Although admittedly, we do get that sometimes, because when you hear snippets like that, we hear clients concerned about a debt bubble or something like that. At the end of the day, we're not concerned about that. What we focus on is, well, one, the safety of the treasury market, but then also the yields they offer. This is something that's been talked about, every day on all these programs for the past number of months, the attractive yields that are out there. What we're finding is that our clients are still generally sitting in very short-term investments, and it's hard to blame them, because treasury yields of 5% or more are attractive. They're at the highest levels we've seen in years, but we're still trying to get them to get their feet wet a little bit with some more intermediate or long-term bonds, where you're taking out some of that reinvestment risk should the Fed have to cut rates down the road, and some of the uncertainty. And it's a tough message to get out there, and it's a tough pill to swallow when you see such attractive short-term rates, but we're continuing to provide that guidance and suggest our investors move out a little bit and lock in yields of 3.5%, 4% or more with very high quality investments with slightly longer maturities.
Colin, Tom and I are calling that a cash trap, that once you get in, it's much harder to get back out. Do you see some reinvestment risk on the horizon then? People that have gone into T-bills now, that when they come out the other side, those yields won't be available anymore?
True.
Absolutely. I mean, that's the huge risk that we're talking about, but it does seem like that risk might be pushed back a little bit. I mean, we're not in the camp that the Fed necessarily is going to cut rates anytime soon. We still disagree with the pricing we see in the market, where the Fed funds futures is implying a rate hike by July and then a rate cut just a few months later. We don't really subscribe to that theory, where we think the Fed can hold and pause for a long time. But at the end of the day, we do expect a rate cut to come, because the Fed will likely need to, because of the negative consequences of the restrictive policy that we see right now. And we don't want our investors, or any investors, to be caught wrong-footed like that, and be tempted with a 5% yield now, only to see 4, 3.
So pound dollar, so that zone, UK 100 just triggered again, look.
So that's been our main message. It continues to be our message. It does seem like maybe reinvestment risk has been pushed back a little bit, but it's still
RSI is now red, so
we call it here the 3-month rolling recession forecast.
this candle's got 30 seconds left on it. It's going to finish below our zone.
It's 3 months away. Seth, any reason to believe it comes anytime soon? And where are you in the team now for that first cut?
Yeah, so for the first cut, from our perspective, that's not until March of next year, March of 2024. We don't have a recession in our forecast as a baseline scenario. Slowing growth this year for sure.
And 500, like I say, is ranging along our support zone here. We've had 1, 2, 3, 4 touches. So if it can't break it, then we're going up. If it breaks it now, we're going down. And you can see where we're going down to. There's the buy zone. Again, you can mark this up. This is the zone where we want to be looking to take buys if it comes down to it.
Right now happening at the Bloomberg Invest Conference, Goldman Sachs' president, COO, John Waldron, sitting down with Bloomberg's Sonali Basak on that very topic. John Waldron a little bit earlier in the conversation saying this might be a recession that we can avoid altogether. Let's listen in.
But I would say a couple things. First, we have 2 very big, very scaled businesses that we feel great about. One, global banking and markets, which is a $30 billion plus minus revenue business that generates mid-teens returns, that is a leading client franchise all over the world in banking type activities and in market type activities. And we've increasingly run that business in an integrated fashion, particularly focused on financing our clients, where we think there's an enormous opportunity. We talked about the environment. One of the things I didn't say that I probably should have said, and we feel strongly, the financing environment in the economy is going to get tougher. It's going to be higher cost to finance. It's going to be less available than it was. Financing was quite plentiful. It's going to get more complicated. Goldman Sachs is very well positioned to be a more prominent financier for our clients. And by running the global banking and markets businesses now in an integrated fashion, we think we're bringing all that intellectual capital and throw weight together to be more valuable to our clients. So we love that business. We think that business is going to continue to produce mid-teens returns through the cycle. And there's obviously growth and opportunity for us to continue to take share. And we've proven we can take share. The second primary scale business in the firm, as you said, is called Asset and Wealth Management. That is a business that is an aggregation of a bunch of businesses that we had inside the firm that we've now brought together into an integrated platform. It's really 3 primary components. There's a liquid active asset manager with $2.7 trillion of assets under supervision on that platform. Top 5 active asset manager in the world, very global, runs the gamut from a product solution standpoint, from cash and money markets through fixed income. Fully scaled platform, very global. And then we have a wealth management business which focuses primarily on the ultra high net worth segment, which are the wealthiest individuals and families in the world. That business has $1 trillion of client assets on the platform. It focuses on, as I said, the wealthier families, but we're only an 8% share in the Americas, if you take the Americas broadly as a category. So there's a lot of fragmentation in that marketplace. We've been at that a long time. We continue to grow that business mid to high single digits, and we think there's an enormous amount of runway there. We also think there's a lot of runway internationally.
Right here, we've got the alerts, so look.
So those 3 businesses now run on one integrated platform. We're spending a lot of time in terms of tech transformation to build a more unified chassis, as I would call it.
There's the RSI crossing into the first overbought zone, which means a continuation. So obviously we'll be looking to take a buy here. Dollar's gone weak.
We have public market capability.
So that's good.
Private market capability. An integrated platform that is increasingly tech forward.
Yeah, as you can see, 76.
And so that business for
so there's a continuation trade here.
We have historically
just going to move this.
Business with more of our own
like I say, because we took profit.
Banking-oriented fashion. So Goldman Sachs, unlike a Blackstone or a KKR,
we took it there.
Had a lot more of our own balance sheet invested in alternative assets. We have, over the last 4 years, transitioned that balance sheet.
That was our actual trade.
$60+ billion of historical principal investments on the balance sheet
So we'll see if we can get another sell on cable. We'll watch for the breakout zone as well. Look, as you can see, it's what I mean. You see, if you set a breakout zone an hour before, you've got a level of resistance and support now, and you've got a breakout here, so it's kind of already happened. So that's why I like it to be in this zone, this first hour of New York trading. That's a nice win look on the buy on pound dollar. Look at that, pushed up nicely. So when it first hits this first area, it's usually 9 times out of 10 a continuation trade. Like I say, for at least five pips or so. Get your 5 pips and then get out like here. Look, it crossed there. Look at that, more than 5 pips. That's all you want. And then we'll catch the pullback. Let's have a look on here. Look. So meanwhile, UK 100 is now in profit.
What does this mean? Because you just kind of highlighted one part of Goldman Sachs looks a lot like KKR and Apollo, just one part, right? And so how big does that alternative asset manager get within Goldman Sachs? And how does it fit with the other businesses, for example, with investment banking, with those folks being some of your biggest clients?
It's a good question. I mean, I have watched the growth of alternative assets.
Excuse me.
Frankly, and I spent a lot of my career in and around alternative assets. I was doing private equity deals for those companies and other clients of the firm, 20 some years ago.
So we're 78, 77.
And they continue to grow and take share, if you will, of the asset aggregation in the world.
Okay, I don't want to be entering a trade now. Not when we're so close to the open. There we go. And there's your cross down out of the zone. You see.
A handful of years ago.
Beautiful.
But I think more clients want access to the.
So you had a 5 pip win on the upside, taking it from there. And even with spreads and commission, you're still 5 pips.
For 30 years has been a leader in this business. We have just done it a little differently than would be the.
So we're not going to trade it anymore now. We're going to let this zone fill up.
Our own capital, as I said,
put 2 lines across the high and the low.
Unique attributes. As you said, we have the largest
wherever they may be. We don't know yet, but we'll just stick them there. But once we get a breakout, we'll measure the distance and we'll take half that profit. Hey, job done. Very mechanical if you like that kind of thing. But of course we use the RSI and price action to confirm, and we don't just automatically enter.
We have an idea, we bring it to them and say, why don't you guys invest with us?
If there's these breakouts of mechanical, you still want to use price action and not just blindly enter into them. So there's a nice push out. If we get a cross up above the average line, obviously that's where I want to take a sell. Well, wait for the open. We've got 3 minutes to go, 4 minutes to go. So good luck, everybody. Just going to take out the line so I can see the actual chart. 20 is crossing the 200 as well. Ooh, so this is quite interesting. And we get a nice cross of the moving averages as well at the same time. Are we going to bounce up, or we're coming down to this level here?
Well, I'd say the following. CEO succession is not something I spend a lot of time on. I have a lot to do. I just outline all the things we have to do. My job is to execute with our team, execute that strategy. So my days are full executing that strategy. We do spend a lot of time on succession below, let's say, the CEO or president or CFO level. I spend a lot of time running succession
4625
for our people below that level, and I think we've done a better job in the last 4 or 5 years really trying to build a deeper succession pipeline and giving our
we set up our broker, we're logged in, got the right lot size, yep, all good. It's trying to break, it's retesting again that support zone. RSI is kept well below the average, hasn't broke it, so it's looking like it wants to go lower, but we'll wait and see. We don't jump in until we see the move.
So that's what occupies my time as it relates to succession.
Earlier in the conversation, you kind of talked about the potential for investment in AI and technology. Goldman was really at the forefront of really automating.
We should see a nice drop on the pound dollar as well.
Automating equities to the point of bringing a 500 person trading desk to one. Are you working on using AI to further automate some of the more difficult areas?
Bouncing up again off that zone.
So we've been using AI.
Got 1 minute 10 seconds left, everybody, so get ready. Remember, If you miss the move, if it's that big, just wait for the reversal. Wait for it to stretch all the way out, fill the candle, and then collect the wick. When the wick gets exposed, that's where we jump. That's where I jump in and take my profit. Try and enter whenever you get a full engulfing candle kind of setup where there's no wicks. Jump in on that. Wait for the wick to be exposed, because always there'll be people taking profit. You want to be taking some as well. Don't keep holding so you get caught out. 30 seconds to go, so good luck everybody. Let's see. Are we on it? Yep, we're all in, we're all in. 20 seconds to go. Are we going to get a spike up and then we sell here? Are we going to get a spike down and we buy here? Who knows? It's the exciting thing about it. I don't jump in before anymore. I used to try and anticipate, but eventually you blow your account. Or you're too stubborn to accept you've gone wrong. There's the move. It looks like he wants to try and break down. Let's see. It's bashing against that moving average. We're just holding. Really trapped between those moving averages. This just makes it a really nice setup. If it goes higher, we'll just load some more cells in.
Their next meeting about 6 days away. Into the FX market off the back of that data too, we show some dollar weakness here, some euro strength, 107.50 on the euro, positive on that currency pair by about 0.5%.
Trying to push up, look.
And crude around about 0.36%.
Push us higher, I'll put some more cells in. Just wait and see. So a quick look at the UK 100. Yeah, it's dropping. Pound dollar is pushing up the dollar strength again. Yeah, there we go.
It is clear our strategy is working, as evidenced by our 61% increase in gross profit per unit, best Q1 figure in company history. Abby, that stock absolutely surging.
It is absolutely surging, but what's interesting here, John, there's so much volatility.
It's going to push up. We're going to get a sell on this zone here, maybe. Let's wait and see.
That's greater than 10%, and if it can get back above 20%, there it is. It's the fourth time we've seen this stock climb by 20% on a trading day. So again,
is the buy the fake out?
Piece of that is the fact that the stock is down 95% from its all-time peak, and there's a 50% short interest.
So many people will be buying based on that previous news, you see.
Those results that you were just talking about, better than expected. The used car retailer really putting up.
So it's just crossing the neutral, dropping down.
Guidance for the net income, but their estimate for adjusted earnings of $50 million in this current quarter versus the estimate of $3.6 million of a loss. That's really a significant difference. Investors rewarding those shares at this point. Again, the stock
still waiting.
Soaring right around that 20% up mark.
Amazing, up 19% right now. Abby, thank you. Different story for GameStop. Shares extending its double-digit loss amid major C-suite changes. The retailer firing its CEO, Matt Furlong, and electing a new executive chairman. This coming on top of a weaker than expected Q1. Isabel Lee has more. Hey, Isabel.
Hi, John. It's definitely a 1-2 punch for GameStop. Shares were plunging as much as 22% in pre-market trading, and it's now lower by around 19%. And as you said, yes, the company reported net sales that missed estimates, and more importantly, it terminated Matt Furlong, its president and CEO.
Pushing up as I suspected. I'm just going to wait for it to reach this zone here.
Immediately, and Cohen is the largest shareholder of the company with 12% of the stock. General Robinson will become general manager and the principal executive officer. He will report to Cohen. So here's the interesting thing, John. GameStop called off its earnings, and Wall Street strategists aren't happy. We have Jefferies analysts saying it's difficult to have an opinion on results without a call. They also said the only thing consistent is management change. Barrett also said
Let's see if it breaks this. Are we going to the neutral resistance, or are we going to sell now?
Isabel, thank you. Carvana up almost 20%. GameStop there down almost 20%. Turning to tech, Lucid gearing up to enter the Chinese EV market. According to Reuters, the company is also said to be considering local production in the country. Their stock slightly higher by 3%. Ed Ludlow has more. Morning, Ed.
Yeah, good morning, Jonathan. Reuters referencing
Pushing down nicely.
China head Zhu Zhang in those comments that they intend to enter the Chinese market on an export basis. Vehicles built in Casa Grande, Arizona, that would then be imports into the Chinese market. They cite an unnamed person familiar with the matter on the idea that Lucid is looking at local production.
Nice.
As you and I have discussed many times.
Yes, we'll collect those cells there. Brilliant. Nice to get. What do we get? We got 5 positions, 10, 20, 30, 40, 50, 60, $80. $80 there, bagged. Caught that pullback very nicely.
Recent news that they did a $3 billion offering, most of which will come from the Saudi Public Investment Fund, which already.
We're going to push down in lower.
The narrative around Lucid is really, are we moving towards privatization? They have had so many.
So what the alert was about? Just the RSI again crossing the 75. It's going okay. Again, we're just waiting for this setup now. There you go. We're into the zones now, so we can adjust this. At the moment, that's the lowest point to the zone. Bottom of that candle. You just adjust this as it goes for the hour. Just leave it alone. Price bouncing off that, and it's pushing back down again now.
Some valleys coming up. The Allen & Co conference a year ago. One of the big stories was the tie-up between MLS and Apple TV. And you look at some of the reporting out there, the profit-sharing mechanism which Apple TV is involved in. Is this lift-off now? A name like Lionel Messi. You know, Gareth Bale, for example, didn't have that amplifying effect when he was at LAFC. Lionel Messi is probably a different category, right? But I think about the streaming rights. Apple TV made a big move to bring MLS to the international audience, not just the US audience. I wonder how many eyeballs it brings in, John. You know, from a streaming perspective. You know that I want this league to get off the ground. I'm desperate for some real action, but I think it's going to be needle moving. More to life than money, football is life.
I agree. Ed Ludlow, thank you for that. I wanted to go there. I'm looking forward to your coverage a little bit later on Bloomberg Technology. Karen and Hyde.
Still trapped, you see. It's still trapped between this zone and this zone, really. Not really doing anything. Bouncing in and out the RSI zone, so.
Hey John, let's talk about what we're actually talking about for these subscriptions. So these are subscriptions for tools that will generate images from a prompt across Adobe products, including Photoshop, of course, one of their most popular products. And in addition, if a customer is sued for infringement, Adobe will pay damages.
Good moving again, not nice. This is what I like to see. Hitting that resistance zone. Let's see if we can take advantage of that. Or we're going to go higher this time. Push through it, or it's going to just reverse again. I'll try and take some profit if we are. Looks like it's going to try and push higher this time. Let's see if we can grab some.
There's 0 sell ratings, and you can see it's getting a lot of love from shareholders this morning, currently up about 3%. This company reports next week. It's going to be interesting to see how much of a hot topic AI is on that Adobe call.
Katie, thank you. That's the latest.
Brilliant. We're closing some more cells there. Perfect, 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 perfect. We got another 10, 20, 30, 40, 50, 60. So we're well over $150 now. We closed all those there. Again, just putting the results into the group. Nice. See, that's just every time it hits that zone, just put the sales in, boosh. There we go.
That's equities. What about credit? Amanda Lynham and the team over at BlackRock saying this: it's not all about technology and credit. While the sector has been a meaningful contributor in both investment grade and high yield, it pales in comparison to the equity market. Amanda Lynham joined us now for more. Amanda, always wonderful to catch up with you. Let's start there. The story that we see, narrow leadership in equity markets. Do you see the same thing in credit?
Good morning, Jonathan. Thank you for having me.
RSI again peaking down. It's going to cross that neutral zone. Let's see. 52, 51, 52, 53. Is price looking to push lower on this?
This is a great example of how the equity market is also not the credit market in many respects. We've had more broad-based participation from sectors in terms of contributing to total performance, or that breadth measure that we think is.
That's good. Nice range again. Look at that dropping lower. It's going to hit this. So just looking at what we're up for the day. For the day we are $731.02. So that's today's. I think we're going to call it a day at that. Wait and see if this breaks. So yeah, we're going to be out today. That'll do for us. So that's good. Current week will well up. That's good. There's the push down, and we'll just see our setup here. So pound still strong. That's good. Oh, we've almost hit TP. Look at that on the UK 100. That's perfect. So there you go. If you had held that trade, you should be taking your profit now. Would be taking off the table. Nice win on UK 100 London breakout. So you did it. Just wanted to see if it would. I took mine early, but there you go. We have hit TP. Look at that. It's perfect. And again, how did I set those levels? Because it was 200 the range. I set it for about that, just a bit under, not to be too greedy. And that's done it. So that is a perfect. So the only one trade outstanding, if you want to take it, is wait for this next hour on the pound dollar for the New York. We'll call this the New York breakout zone. And if you want to learn all these strategies, then obviously, like I say, you can join our Discord group, message me through the YouTube channel, or by going to the website www.mohawkforex.com, and I will teach you these strategies that I use pretty much every day. As you can see, we bagged some good results. So that's a nice 18 pips, 185 points win on the FTSE 100. We had a win of 10 pips on pound dollar this morning as well. And then obviously we've just won on the US 500, which I'm leaving alone now. As you can see, look, it's trapped in that range. So I've had enough of it now. I've played it a few times. We've got, you know, a couple $100 out of it, so that will do. And like I said, we'll just wait for this setup, and I'll post this in the group later on, and that's kind of what I do. So I'm off to the gym now, a bit of shopping, and then I'll be back testing. But yeah, thanks for joining the live stream. I love doing this. I do it for myself, just so, you know, I don't lose my sanity. So like I say, we're just over $700 for the day, and that's just trading London Open, News and NY Open, which is true. It is. So yeah. So we'll do more live streams. We might do another one tomorrow, depending on the weather here. Like I say, go to the website www.mohawkforex.com or leave me a message if you want to learn how to scalp like this. True scalping is all the way. And there you go, look at that, it's going dropping even lower now. Nice little win on the UK 100. Love that setup, really, really good. Perfect. Right, well, trade safe, take it easy, remember what's your risk, and only trade with what you can afford to lose always. And yeah, enjoy the rest of your morning in America, enjoy the afternoon in the UK in London. We're off now to spend and do a bit of shopping, and we'll be back later on in the team to do some more back testing. So take it easy everybody, thanks again, and trade safe.